China.
China.
China. China. China. China. China. China. China. China.
What's up, guys? Ben here, and welcome to Motivation to Invest. Diversify, diversify, diversify. It's something most great investors preach, but not many investors actually do. Most investors are too heavily invested into US stocks. Now, don't get me wrong, I love US companies and there are some great ones there. But aren't we forgetting something? I'm talking about the second largest economy in the world. A country which economy is growing at 6% per year and has the world's largest population of over 1.42 billion people. Of course, I'm talking about the juggernaut, which is China. China is not just a manufacturing hub, they have a growing middle class population with excess income and increasing consumer habits. Current estimates put the size of China's middle class at 400 million people, just less than 1/3 of China's total population. To put this growth in perspective, in the year 2000, just 4% of China's urban population was considered to be middle class, rising to over 30% in 2018. A study by consulting firm McKinsey & Company projects that 76% of China's urban population will enter the middle income bracket by 2022. With this increase in the middle class, it means excess income and increasing consumer habits. What makes China so special? Well, apart from the amazing growth, they actually restrict many Western brands, such as the major tech giants we know and love, from Google and Amazon to even Netflix. So in this video, I'm going to reveal my top 3 Chinese stocks to potentially buy right now. This is part 2 of my series on the top Chinese stocks. So if you've not seen part 1, check out that on the link below, and I'll leave a link above. Be sure you guys watch till the end to find out which Chinese stocks I have in my own personal portfolio. Without further ado, let's dive in. Welcome back, guys, to Motivation to Invest. Before we get started, it would really mean a lot to me if you guys can give this video a big thumbs up. That really helps out with the YouTube algorithm, which allows me to create more great content like this for you guys. In addition, if you want more investing tips and exclusive stock picks, which I personally am investing into, then you should definitely subscribe to this channel and turn that notification bell on. With that being said, let's get into the video. Kicking things off at number 3 is China Mobile, the world's largest mobile network with over 944 million subscribers. China Mobile is a great play for the growing 5G network. The telecom company has said it has plans to add 250,000 units of its 5G base stations by the end of 2020. And analyst Danny Chu says it's on track to hit that target. In the first 4 months of 2020 alone, China Mobile added 44 million 5G subscribers, suggesting that the company will not need to offer heavy handset subsidies to attract subscribers. Bank of America has a buy rating and a $59 price target for the stock. On to number 2 is China Life Insurance, which is China's largest life insurance provider. With a population of over 1.4 billion and a growing middle class, the need for life insurance is becoming ever more apparent in China. However, despite this, profits were down 34% in the first quarter of 2020, but the company's 13% premium growth outpaced other Chinese peers. However, lower interest rates and the slower value of new business growth is affecting China Life. However, if trade relations improve between the US and China, this could drive more upside for the stock.
In China, they say I don't like China. I love China.
People think I don't like China. I love China. China. China is the new China, by the way. China. 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 I deal with China. 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 Big league. China. So don't tell me about China. I know China.
China Life shares also pay a sizable 4% dividend, and Bank of America has a buy rating and a $14 price target. And finally, number 1 on my list is Tencent, one of the largest companies in the world and definitely one of the largest in China. Apple recently made headlines for hitting the $2 trillion market cap, But to a company like Tencent, that's still small. Tencent's market cap is over $5 trillion. Tencent owns WeChat, the country's top messaging app, the world's largest game publishing business, China's second largest cloud platform, and one of the country's largest video streaming platforms. And to top it all off, it's even got its own digital payment platform. This stock has grown massively and over the past decade has risen by over 1,400% as its gaming and advertising business expanded and entered new markets. So does this giant still have room to grow? I think so. Tencent's advertising business generated 19% of its revenue the last quarter and sells ads across WeChat and the older QQ messaging platform, in addition to its mobile network and Tencent Video and other apps. Thanks to this large selection of platforms, the segment's revenue rose by 32% year on year. However, Tencent's advertising business does face fierce competition from companies such as Alibaba and China's largest search engine, Baidu, which they say is the Chinese version of Google. But luckily, Tencent's gaming business has picked up the slack, and surprisingly, a lot of that revenue comes from overseas. Tencent's gaming business generated 35% of its revenue last quarter, and has popular games such as Honor of Kings and League of Legends. Its revenue grew 31% during the quarter as people retreated to play more games during the lockdown. Surprisingly though, Tencent also has stakes in overseas companies like Fortnite publisher Epic Games, Platinum Games, Ubisoft, and even Activision Blizzard. This has reduced its dependence on the Chinese market, which has fickle censorship, tight playtime restrictions, and rigid licensing requirements. That expansion also widens its moat against top Chinese rival NetEase, which is gaining significant momentum overseas. Looking ahead, investors should expect Tencent's gaming unit to rely more heavily on overseas titles such as Call of Duty Mobile. But that's not all Tencent does. What about its cloud and fintech services? So Tencent's fintech and business services unit accounted for 24% of its revenue last quarter, and it generates most of this revenue from Tencent Cloud, China's second largest cloud infrastructure platform after Alibaba Cloud. And then it has WeChat Pay, which is near enough in a duopoly with Alipay. Them two players are boxing off almost the entire Chinese market. That's 1.4 billion people. Revenue from this side of the business rose 22% last quarter. Now, surprisingly, this was slightly slower than previous quarters, but Tencent attributed this to obviously the lockdown and people were spending less. Analysts predict Tencent's stock to grow massively, between 17 and 20% in the next few quarters. Previously, Tencent's sales have grown at a massive 35% compounded annual growth rate over the past 3 years, with its earnings per share growth in the previous period up 41%. This is incredible for a gigantic company worth over $5 trillion. They say elephants don't gallop, but in this case, they definitely do, making Tencent a great long-term play for investors. Overall, these Chinese tech companies are a great way to diversify your portfolio and gain some exposure to the massive Chinese market. The only near-term risk I can see is a legislative threat to potentially delist these Chinese stocks from US stock exchanges for not following their proper accounting rules. This is a risk as many smaller Chinese stocks have been known to inflate their earnings using accounting trickery. But I don't envision the gigantic tech players such as Tencent, Baidu, and Alibaba being delisted from the US stock exchanges. There's just too much at stake for many companies. For example, Alphabet's Google and Walmart both own big stakes in JD.com, and investment juggernauts BlackRock and Vanguard are among Alibaba and Baidu's top shareholders. Over 150 companies trade on US stock exchanges, and their listing fees generate significant revenues for the New York Stock Exchange and the Nasdaq. So have I personally bought shares in these Chinese stocks? Well, if you guys watch this channel regularly, you'll know that the unique thing about Motivation to Invest is I'm very transparent about the stocks I buy, and even sometimes when I buy them. So yes, I do have shares in many of these large tech giants, such as Baidu, Tencent, and Alibaba. However, I also have a few smaller positions in some Chinese tech growth stocks, but they are also listed on the New York Stock Exchange. If you wish to find out more about those stocks, check out my previous video on the #1 Chinese growth stock I've recently purchased. I'll leave a link for that video above and below. So which is your favourite Chinese stock, and what do you think about investing into the Chinese market? Let me know in the comments below and I'll join in the discussion. Also, I've got a special treat for you guys. So if you guys haven't already, be sure to download Trading 212 using my special referral link and you'll get a free share worth up to $200 or £200 when you sign up. If you already have this app, then why not consider downloading Stake app also? Stake is great for investing into a variety of US companies and has a little bit more of a selection than Trading 212. They also offer a free stock worth up to $200 or £200. So I'll leave links for both of those apps in the description below. You can download them, deposit, claim your free share, and have a Merry Christmas. Also, I always get asked which stock research platform do I use, and I've told a few of you guys before, if you watch regularly, I use the stock research platform called Stockopedia, and I have a special discount link for that, which I mentioned briefly earlier. So if you guys sign up using the link below, you'll get 25% off when you sign up, and it's a great platform. I use it all the time, as you know, on this channel, to research stocks and quickly look at a business and say, okay, is it a good buy or should I be selling right now? So I'll leave that link below. Check it out and see if it fits your investing style. In addition, if you guys enjoyed this video, I would really appreciate it if you give it a big thumbs up. That really helps out with the YouTube algorithm, which allows me to create more great content like this for you guys. In addition, if you want more investing tips and exclusive stock market picks, which I personally am investing into, then you should definitely subscribe to this channel and turn that notification bell on. With that being said, I'll see you guys in the next video. Invest safe.